In today's video, the focus is on the highly anticipated earnings report for Palantir Technologies, a company that has sparked intense debate among investors. Some believe it's destined for greatness, while others think it's just another overhyped stock. But what if this earnings report holds the key to tipping the scales one way or the other? Stay tuned as we unpack what these earnings could mean for Palantir's future, and more importantly, how it could impact your investment strategy. So before we begin, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. As Palantir's earnings announcement approaches, the market is in a state of flux, with mixed signals about a possible recession. This makes Palantir's earnings particularly important, as it will provide insight into how the company is navigating these uncertain times. In this video, we'll explore three key aspects of Palantir's earnings to watch closely, share one significant concern, and discuss a strategy for how to approach investing in Palantir post-earnings. Earnings season is always a wild ride, and this time has been no exception. Large-cap stocks have been swinging wildly, with some small-cap stocks delivering surprising results, both positively and negatively. It's a reminder that earnings season can be a time of significant volatility, and it's crucial to stick to a well-thought-out plan rather than getting caught up in the market's day-to-day gyrations. One of the most critical things to remember about earnings season is that stocks can be highly manipulated during this time. It's when exaggerated movements based on short-term news, rumors, or investor sentiment are most likely. This is why having a clear plan and sticking to it is so important. For those interested in following along with Palantir's earnings in real time, there's an opportunity to watch it live together in our members group, where the results can be discussed as they happen. Palantir is a stock that has always generated strong opinions. Some see it as a future trillion-dollar company, while others view it as an overhyped meme stock with little real value. This divergence of opinion makes every earnings report a battleground between bulls and bears. It's a bit like Tesla in its early days, with strong supporters and equally strong detractors. Palantir's unique position in the market, focusing on big data analytics and artificial intelligence, only adds to the intrigue surrounding the stock. So what should investors expect from Palantir's upcoming earnings? It's likely that the company will report a small beat on both revenue and earnings per share, EPS, along with an increase in free cash flow. For those unfamiliar with Palantir's financial reporting, free cash flow is a critical metric due to the company's unique accounting structure. It's a number that investors should focus on closely. A positive free cash flow indicates that Palantir is generating enough revenue to not only cover its expenses, but also invest in future growth opportunities. This is particularly important for a company like Palantir, which is still in the growth phase of its business lifecycle. There are three core elements to watch for in this earnings call. Firstly, guidance on new contracts. Palantir has announced several new contracts this quarter, but the big question is whether these will translate into immediate revenue or be subject to delays, particularly with government contracts, which are notorious for their slow payout timelines. Additionally, several large contracts have been renewed, which is a positive sign that the business model is sticky, particularly with government clients. This renewal of contracts suggests that Palantir's services are becoming increasingly embedded within their customers' operations, making it difficult for them to switch vendors. The ability to retain and renew contracts is a strong indicator of customer satisfaction and the perceived value of Palantir's offerings. But before we proceed, here's a question. What's the most surprising stock move you've seen this earnings season? Let's hear your thoughts in the comments. Secondly, the overall growth rate for 2024 is crucial. While the company has guided to 20% growth this year, which is solid, it's not enough to justify a significant upward revaluation of the stock. Given that the stock has already appreciated by 63% year-to-date, a raise in guidance would be necessary to support further price appreciation. Many companies have raised their full-year guidance this earnings season, and it would be a strong positive if Palantir follows suit. However, the market will be looking for more than just incremental growth. Investors want to see a clear path to sustained, long-term growth that justifies the current valuation. This could involve expanding into new markets, developing new products, or increasing the adoption of their existing platforms among commercial clients. Finally, management's comments on share buybacks will be telling. Wall Street generally views buybacks favorably, and Palantir already has authorization to repurchase shares. The key question is whether they plan to execute more buybacks this year, especially given the recent run-up in the stock price. Share buybacks can be a bullish signal, indicating that management believes the stock is undervalued relative to its future potential. On the other hand, if they decide not to pursue buybacks, it could suggest they see better opportunities to invest that capital elsewhere. This decision will likely be influenced by Palantir's overall strategic goals and the availability of high-return investment opportunities within the company's core business areas. However, there is one major concern regarding Palantir's valuation. The stock is already trading above fair value estimates for the end of the year, considering all the growth that has been priced in. This means that while the stock isn't cheap, it could quickly become undervalued again if there's any negative reaction to the earnings report. We've seen this happen a few times this year already, where the stock dipped to attractive levels and then rebounded strongly. This kind of price action is typical in volatile markets, where investor sentiment can swing dramatically based on the latest news or data point. For long-term investors, these dips can provide excellent buying opportunities. It's essential to stay focused on the company's fundamentals and not get too caught up in short-term price movements. As always, valuation is the key to making smart investment decisions. Understanding how to calculate intrinsic value can give investors a significant edge in the market, helping to identify opportunities where the stock price does not fully reflect the company's underlying worth. Now let's discuss the strategy going into Palantir's earnings. Timing the market is a fool's game, and it's not something that's recommended. Instead, the focus should be on a long-term plan and sticking to it regardless of what the market is doing in the short term. There's a lot of noise out there, with different analysts and pundits offering conflicting advice on whether to buy, sell, or hold. The best advice is to ignore the noise and stick to your plan. Staying disciplined and maintaining a long-term perspective is crucial, especially in times of market volatility. It's easy to get caught up in the latest headline or market movement, but successful investing requires a steady hand and a clear focus on long-term goals. If Palantir's earnings report is positive, but the stock sells off due to some short-term reaction, it could be an opportunity to add to your position, especially if the stock drops back into the low $20. Having cash ready to deploy allows for taking advantage of opportunities when they arise, rather than reacting emotionally to short-term market movements. By having a clear plan and sticking to it, investors can make more rational and informed decisions even in the face of market uncertainty. Every stock, even the best ones, will experience periods where their market price diverges from their underlying fundamentals. These are the times when savvy investors can pick up shares at a discount. If Palantir delivers solid earnings but the stock takes a hit anyway, it could be viewed as an opportunity to buy more. Remember, the market is not always rational, and short-term price movements do not necessarily reflect the long-term potential of a company. By focusing on the fundamentals and maintaining a long-term perspective, investors can capitalize on these opportunities to build wealth over time. The table we've discussed highlights some critical metrics for Palantir Technologies that investors should be aware of. With a current price of $29.28 and a market cap of $65 billion, Palantir has already shown significant growth this year, appreciating by 63%. However, with the company guiding towards a 20% growth rate for 2024, the question remains whether this momentum can be sustained. Key areas to watch include the company's ability to secure and renew large contracts, as well as management's approach to share buybacks, which could signal confidence in the stock's future potential. It's also important to note that the stock is trading above fair value estimates, making this earnings report crucial in determining whether Palantir remains a strong buy or if caution is warranted. As always, having a well-thought-out strategy and keeping an eye on these indicators will be key to making informed investment decisions. In conclusion, Palantir's upcoming earnings report is critical for understanding where the company is headed. Key aspects to watch include guidance on new contracts, growth rate adjustments, and management's stance on share buybacks. While there may be concerns about the stock's current valuation, being prepared to act if the stock drops to attractive levels is essential. The key is to remain patient, stay informed, and be ready to act when the right opportunities present themselves. Investing is all about having a plan and sticking to it. Don't get caught up in trying to time the market or reacting to every piece of news. Instead, focus on the long term and use periods of volatility to your advantage. If you're interested in learning more about how to set price targets, evaluate stocks, and build a long-term investment strategy, check out the links in the description for more resources. Whether you're a seasoned investor or just starting, having a solid plan and the right tools can make all the difference in achieving your financial goals. But before wrapping up, here's another question. What stock do you think has the most potential for explosive growth in the next year? Share your thoughts in the comments below. Thanks for watching Simple Investing Secrets. If you found this video helpful, please like and subscribe for more content on stocks, investing strategies, and financial tools to help grow your wealth. And remember, this video is for informational purposes only and is not financial advice. See you in the next video.